On September 9th, 2025, something happened that could reshape global politics. Israeli forces carried out a strike in Doha, the capital of Qatar, targeting Hamas political leaders. On the surface, it looked like one more move in the long conflict between Israel and its opponents. But this strike was different. It broke basic expectations about sovereignty, diplomacy, and the protection in the Gulf. It triggered furious condemnation from Saudi Arabia and other Arab states. Why does this matter? Because when a trusted mediator like Qatar is attacked, and the U.S. seems unable or unwilling to stop it, the credibility of American guarantees in the Middle East comes into question. And when credibility is shaken, economies, alliances, and global power structures begin to shift. This isn't just about governments or military alliances. It's about the middle class, ordinary workers and families who end up carrying the costs while elites and corporations find ways to profit. The economic foundations of U.S. power. For decades, U.S. power in the Middle East has rested on more than military bases or aircraft carriers. It was built on a set of economic deals. Oil priced in dollars. Gulf oil revenues recycled into U.S. banks, bonds, and real estate. America supplying arms and security guarantees in return. This arrangement let the U.S. run massive deficits without punishment. Why? Because Gulf states kept buying U.S. debt and parking their reserves in dollars. It was a deal that worked for elites on both sides, the U.S. ruling class and Gulf monarchies. But when Israel's strikes made Gulf states doubt America's reliability, the deal begins to wobble. And when it wobbles, the middle class feels the shock first. The immediate economic risks. If Gulf rulers stop trusting Washington, three things may happen. Reserves and loans. They may stop parking central bank reserves in the U.S. and shift themselves elsewhere, weakening America's financial dominance. Arms and credit. They may buy weapons and credit from China or Russia instead of the U.S., cutting into an industry that has long been America's cash cow. Oil and currency. They may sell oil and currencies other than the dollar, slowly eroding the petrodollar system that keeps U.S. deficits alive. Each of these would be a blow to U.S. hegemony, but none of them would hurt the elites who set policy. They will adapt, shift investments, and profit from volatility. The ones left exposed will be ordinary Americans. Why? Because when trust in the dollar slips, borrowing costs rise, inflation follows, and governments respond by cutting social spending on schools, healthcare, and infrastructure. So who wins and who loses? Here's the hard truth. War and instability are profitable for the right people. Winners? That would be defense contractors, private security firms, energy traders, big banks. Every bomb dropped is another contract. Every oil price swing is another windfall for traders. Every military escalation is another stock bump for the Lockheed Martin or Raytheon. Losers? Of course, the middle class. Workers face higher gas and heating bills, more inflation, and government cutbacks. Students pay higher tuition. Retirees face smaller benefits. Families see budgets stretched thinner. War works like an invisible tax. It drains public budgets and household savings while funneling money upward to corporations and shareholders. The wealth gap widens again and again. The Gulf's dilemma. Saudi Arabia, in particular, faces a dilemma. For years, its rulers have promised citizens a new future, mega projects, high tech industries, and more diversified economy. Those promises depend on stable oil revenues and U.S. protection. Now, with protection in doubt, Saudi leaders must choose: stick with Washington and risk being humiliated by Israeli actions, or diversify towards China, Russia, or Turkey, shifting finance and weapons away from the U.S. Either way, the domestic social contract is at risk. Saudi citizens get subsidies, jobs, and benefits in exchange for political quiet. But if oil revenues go into military spending instead of welfare, frustration and unrest will grow. And again, it's the ordinary people, not the royal elites, who will feel the squeeze. The credibility crisis. The heart of the problem is credibility. For nearly 80 years, U.S. leadership in the Middle East depended on one thing: allies believing America's promises would be kept. Israel relied on unconditional support. Saudi Arabia relied on security guarantees. Now, Washington can't satisfy both at once. Supporting Israel alienates the Saudis. Restraining Israel angers powerful lobbies at home. Every attempt to balance makes the U.S. look weaker and less reliable. And when credibility slips, alternatives emerge. Gulf elites look to Beijing or Moscow. Global investors hedge their bets. The dollar's dominance starts to fray. So what happens at home? The foreign crisis is mirrored by a domestic one. Inside the U.S., the middle class faces inflation, housing shortages, and rising costs. Yet public money continues to flow toward defense budgets and foreign wars. This creates a classic contradiction. Corporate elites, defense firms, banks, energy giants, they push for militarized responses because they profit directly. Ordinary Americans, workers, teachers, nurses, small business owners, are told to tighten belts and accept austerity. The same policies that enrich a small elite undermine the living standards of the majority. And as wars drag on, this contradiction becomes harder to hide. But what are the global ripple effects? These dynamics don't stop at U.S. borders. War in the Gulf raises oil prices everywhere. Shipping lanes grow riskier, insurance costs spike, and supply chains stretch thin. Airlines raise ticket prices. Trucking costs go up. Food and goods become more expensive. Once again, elites profit, energy corporations and traders post record gains, while the global middle class faces higher bills, tighter budgets, and declining living standards. What are the scenarios for the future? 3 main scenarios lie ahead. U.S. double down. America pours more money into military deployments, trying to reassert control. This buys time, but at a heavy cost. More deficits, more inflation, more strain on ordinary families. Diversification and decline. Gulf states hedge with China, Russia, and Turkey. U.S. dominance fragments. The dollar's special role erodes. New order. Regional powers build alternative pacts. U.S. unilateralism fades, replaced by multipolar arrangements. This could mean more stability, but also less U.S. influence. In all 3, the pattern holds. Elites profit, middle classes bear the cost. In conclusion, who pays for empire? The Doha strike shows us more than a military operation. It exposes a deeper truth. American hegemony rests not just on force but on credibility and economic structures. When these foundations shake, the whole system becomes unstable. Wars are not accidents. They are part of a system that rewards those who turn destruction into profit. Defense contractors, banks, and energy giants thrive. Ordinary people, whether in the Middle East or US, pay the price through inflation, austerity, and insecurity. If the US continues down this path, the middle class will keep losing ground while elites get richer. The only way forward is to recognize war for what it is, not just a geopolitical contest, but a class project that redistributes wealth upward and leaves working families carrying the burden. That's the real turning point we face, not just whether U.S. dominance survives, but whether ordinary people will continue to accept paying the price for an empire that benefits the few at the expense of the many. Let me know what you have to think in the comments section. Be sure to subscribe if it's your first time here, and click that like button if it also helps out the algorithm. So I really appreciate you doing that. And check our link out in the description to find out more about me. Thanks for watching.